Less than 1% of finance graduates will ever sit inside a Bank of America Securities investment banking bullpen. Thousands apply. Most are rejected. You are one of the few who make it through the 99% rejection rate. You think you have already won. You haven't. The interview only measures whether you can enter the system. Nobody explains what the system quietly takes in return. Your calendar stops belonging to you. Evenings become deliverables. Weekends become revisions. Birthdays become scheduling conflicts. Relationships become unanswered messages. Every promotion promises freedom while demanding another piece of your time. You learn to worship deadlines, defend decimals, and fear the sound of an incoming email after midnight. The office never asks whether you are happy. It only asks whether the model balances before sunrise. That is the hidden transaction. You exchange ownership of your life for access to deals worth billions. The money grows, your world shrinks. Eventually you discover the promotion was never the prize. It was only the price of staying. Level 1. Investment Banking Analyst. You are 22 years old. Your compensation ranges from $180,000 to $250,000 a year. You finally enter the building everyone else wanted. The title feels prestigious. The work feels endless. Your days begin before sunrise and rarely end before midnight. Every assignment arrives with impossible urgency. You update financial models after senior comments, fix formatting across massive pitch books, refresh comparable company analyses, reconcile Excel numbers with PowerPoint presentations, and verify every valuation before morning meetings. One misplaced decimal can embarrass an entire deal team. You wait for associate and vice president comments that often arrive after midnight. The document you thought was finished returns covered in revisions. You start again without complaint because everyone above you already survived this process. The office teaches obedience before creativity, precision before confidence, speed before comfort. You stop measuring time in hours and begin measuring it in deliverables. Friends slowly stop inviting you out because your answer never changes. Family celebrations become calendar conflicts. Vacations exist only as approved requests that disappear the moment a live transaction demands attention. The paycheck is unlike anything your classmates imagined. So are the expectations. Every successful presentation earns another assignment instead of relief. Every completed model proves you can handle even more work. You believe this sacrifice is temporary. Everyone tells you becoming an associate will be different. Nobody tells you they once believed exactly the same thing. Level 2. Associate. You are 27 years old. Your compensation ranges from $300,000 to $500,000 a year. The promotion arrives exactly as promised. The workload does too. Analysts now build the models. Your responsibility is finding everything they missed before anyone important notices. Every spreadsheet, valuation assumption, and presentation eventually lands on your screen. You review financial models line by line, rebuild pitch books after managing director comments, coordinate lawyers, accountants, and internal product teams, and manage several analysts across multiple live transactions. Every client believes their request deserves immediate attention. Every deadline arrives simultaneously. At 11:48 p.m., an email marked urgent appears. The client wants revised valuation scenarios before breakfast. The analysts wait for your instructions. You wait for comments from the vice president. Nobody sleeps until the work is finished. Mistakes become more expensive now. A formatting error wastes time. A modeling error damages credibility. An overlooked assumption can delay an entire transaction. Your calendar looks fuller than ever, yet you control almost none of it. Dinner reservations become cancellations. Weekend plans become conference calls. Family celebrations happen without you because another deliverable cannot wait. You earn more money than you imagined possible only a few years ago. Yet every promotion quietly purchases another layer of responsibility. You no longer wonder whether the pressure ends. You begin wondering how much more responsibility remains above you. Level 3. Vice President. You are 32 years old. Your compensation ranges from $500,000 to $900,000 a year. Your desk no longer revolves around spreadsheets. It revolves around execution. Every live transaction now passes through you before reaching the client. Analysts build, associates refine. You decide whether the work leaves the building. You manage mergers, acquisitions, and capital markets transactions moving across different time zones. Lawyers negotiate documents. Clients request revisions. Internal teams chase approvals. Deadlines refuse to move. Every unexpected problem becomes your responsibility before anyone senior hears about it. At 5:41 a.m., your phone rings. A chief financial officer wants last-minute changes before presenting to the board. The legal team disagrees with the proposed language. Markets open in hours. There is no time for perfect solutions, only acceptable ones. You review every presentation before delivery, coordinate international deal teams, settle disagreements between advisors, and keep billion-dollar transactions moving despite constant complications. Success depends less on technical brilliance and more on remaining calm while everyone else panics. The office finally trusts your judgment. It also assumes your availability. Vacations become theoretical. Holidays become working sessions. Your family learns not to expect certainty because clients always arrive first. The title sounds powerful. The reality feels different. You are no longer carrying the workload alone. You are carrying everyone else's consequences, while quietly wondering whether the next promotion will finally give your life back instead. Level 4, Director. You are 37 years old. Your compensation ranges from $800,000 to $1.8 million a year. You rarely touch the first draft of anything anymore. Your job is deciding which problems deserve attention before they become disasters. Every morning begins with several live transactions already demanding answers. Every evening introduces another complication that refuses to wait until tomorrow. You review multiple deals simultaneously, advise vice presidents on execution strategy, resolve due diligence issues before markets open, prepare board-level talking points, and respond whenever a managing director needs immediate support. The technical work still matters, but your judgment matters more. At 6:18 a.m., a buyer discovers an unexpected liability during final diligence. Lawyers disagree over disclosure language. The client wants reassurance. The board meeting begins in 3 hours. Everyone expects you to create certainty where none exists. You spend less time building presentations and more time protecting momentum. Deals survive because confidence survives. The room watches your reaction before deciding how serious the problem really is. The compensation reaches levels your younger self could barely imagine. So does the responsibility. Your children recognize your voice more often through phone calls than across the dinner table. Friends stop asking whether you are available because the answer has become predictable. You finally influence billion-dollar decisions, yet your own schedule remains controlled by everyone else's priorities. The title grows larger. Your personal world grows smaller. Level 5, Managing Director. You are 43 years old. Your compensation ranges from $2 million to $8 million plus a year. The promotion finally places you across the table from chief executives. Financial models still exist, but they are no longer your product. Relationships are. You speak with CEOs about confidential acquisitions, negotiate billion-dollar mandates, manage relationships with private equity firms, institutional investors, and corporate leaders. Cross-border transactions create emergencies without warning. Entire deal teams wait for your decision before moving. At 9:14 p.m., a chief executive calls. A competing bank has offered more favorable terms. Years of relationship building now matter more than valuation methodologies. You listen, negotiate, reassure, and protect the mandate without mentioning the sleepless months behind it. You begin coaching directors instead of correcting spreadsheets. Your calendar fills with board meetings, investor dinners, airport lounges, and confidential conversations. Every handshake carries potential revenue. Every unanswered phone call carries risk. The money becomes extraordinary, yet the freedom never arrives. Clients expect immediate access. Your reputation becomes the asset everyone is buying. You realize technical excellence opened the first door, but trust keeps every remaining one unlocked. The climb is no longer about proving intelligence. It is about becoming someone powerful people refuse to replace, regardless of the personal cost you continue paying every single day. Level 6. Group Head/Global Head of Investment Banking. You are 53 years old. Your compensation ranges from $5 million to $20 million plus a year. You oversee the entire investment banking franchise. Every conversation carries consequences measured in billions. Governments, regulators, boards, and Fortune 100 chief executives expect answers before markets react. You approve the firm's largest strategic mandates, coordinate cross-border transactions across continents, resolve conflicts between institutional clients, and monitor geopolitical events capable of collapsing pending deals overnight. Entire industries can shift because negotiations succeed or fail. At 4:36 a.m., news breaks that a government regulator may block a landmark acquisition. Markets have not opened yet. CEOs are already calling. Reporters are searching for answers. Your team waits for direction. The pressure no longer comes from spreadsheets. It comes from protecting relationships responsible for billions in annual revenue. One careless decision can damage trust built over decades. You finally occupy the highest office. The view is spectacular. Your schedule belongs to everyone else. The system never needed another financial model. It needed someone whose phone every important person would answer immediately. You spent decades climbing toward authority. In the end, access became your greatest product, and time remained the only asset you could never buy back again completely. You finally understand what the system was building all along. For 2 decades, you believed technical mastery was the destination. You perfected valuation models, discounted cash flow analyses, merger structures, capital raises, fairness opinions, and board presentations. Every promotion seemed to reward another layer of financial expertise. It did, until it didn't. Somewhere between director and managing director, the spreadsheets quietly stopped defining your value. Other people built them. Other people checked them. Other people worried about decimal places. Your real product became confidence. Chief executives returned your calls because they trusted your judgment during uncertainty. Boards invited you into confidential discussions because they believed you could navigate impossible situations. Billion-dollar mandates arrived because relationships outlasted financial models. The highest-paid bankers rarely become the best modelers. They become the people powerful clients trust with their reputation. That is the transaction nobody explains when you first enter the building. The late nights taught discipline. The endless revisions built precision. The impossible deadlines created resilience. None of those skills were the final objective. They prepared you for a career built on influence instead of formulas. The system never rewarded the person who understood finance the best. It rewarded the person who could convince others to act with confidence when billions of dollars depended on a single conversation. That realization changes everything you thought you were climbing toward forever. So what separates the few bankers who reach the top from the thousands who never make it past the middle? It is rarely intelligence alone. It is rarely technical skill alone. The real advantage is learning when finance stops being about numbers and starts becoming a business built on influence, trust, timing, and access. That raises an even bigger question. If investment banking is only one path to the top of Wall Street, which career actually gives you the greatest combination of wealth, influence, and control over your own life? The answer looks very different than most people expect. That is exactly where the next story begins.